What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at Alibaba and China. And I read an article today that China is looking at deregulating some of their data throughout the country. And what I wanted to do in this video is I want to go over what that means overall for companies like Alibaba, as well as the Chinese economy in general. Because what we have seen over the last couple of years is a lot of investors have been turned off by the amounts of regulation throughout China and how it has affected a lot of major companies in their economy. So what I want to do is I want to take a look at this, how it specifically applies to Alibaba, go over Alibaba's EPS numbers, revenue numbers, and what we could see happen over the next couple of years as we start seeing some deregulation of their industries. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Alibaba's stock chart. We can see that the stock moved up almost 1.5% here today. Over the last 5 days, it is up a little over 1%. Over the last month, down 7.25%. Over the last 6 months, down 16.1%. And if we look year to date, we can see that Alibaba is down almost 6%. Over the last year, it is up, however, around 8.5%. And over the last 5 years, Alibaba is actually down almost 44% from where it was trading at in 2018. And from its all-time highs of around $310 to where the stock is trading at now, it has moved down over 72%. And the news that came out just yesterday was that China's Cyberspace Administration has proposed the easing of cross-border data security. Chinese stocks were lifted on Friday after China's cyberspace regulator proposed draft rules in which transfers of data, including those related to international trade, global manufacturing, and marketing activities that don't contain personal information, would no longer need a rigorous security review. And this is big news for Alibaba because one of their goals over the last few years has been expanding their business throughout Southeast Asia, including countries like Vietnam and Thailand. And with them being able to get this data more easily out of China, they can help expand those businesses in other countries more quickly. This also is massive for Alibaba as well as any Chinese company that is listed on the New York Stock Exchange, because one of the things this is kind of leading towards is potentially allowing more data transfer to US auditors. And we have seen this come to the forefront over the last couple of years as the US has stepped in and required Chinese companies to allow auditors to look at their books. China pushed back. However, late last year, we saw that auditors were allowed into China. They looked at Alibaba's books as well as a number of other companies, and they gave the thumbs up that Alibaba is good to still stay listed. However, this has been a concern in the back of investors' minds as they have wondered whether this is going to go away or if we will continue to see China working with US auditors to allow them to continue to audit companies' books. And a lot of this big move down with Alibaba has to do with the relations between the US and China. And if we start seeing deregulation where the US is allowed to look at some of this data and be a little bit more upfront about Alibaba as well as other companies throughout China, I think we'll start seeing investors gain more confidence in what China is doing in the businesses within the country. And it would be huge for these stock prices to see investor confidence be restored in China, because Alibaba came in with very strong beats in their most recent earnings announcement. Their EPS beat by over 20% and their revenue beat by over 4%. And if you saw a US company come out with these surprising of beats, you would see the stock price soar. However, for Alibaba, because investor confidence is so low, it has continued to trade basically sideways. And their year-over-year growth numbers have been incredible as well as China has reopened their economy. We can see that revenue has increased by 14% year over year and EPS has increased by almost 50% year over year. And if we look at their EPS numbers over the last couple of years, especially their quarterly numbers, we could see that they have been all over the place. And it started back in 2020 when their economy really started shutting down, where they had this 5-cent quarter, followed by a quarter of $2.46. We see this volatility in EPS kind of continue where they had $4.42, followed by a quarter of negative 7 cents. And then again, we saw this last year in 2022, where they announced negative 44 cents, followed by $1.27, followed by negative $1.09. However, the last 3 announcements, they have had very positive results. We could see $2.60, followed by $1.22, and then their most recent earnings, $1.83. And having more consistent quarterly numbers has also helped their trailing 12-month EPS numbers. We could see that they bottomed out around 92 cents. However, since then, they have grown all the way up to $4.56. This is still quite a ways off their all-time highs of $9.37. However, what we will see next quarter is this negative $1.09 drop off, and that should help their EPS shoot up in a massive way. And I think over the next year or so, we'll start seeing them get back to anywhere from $8 to $10 of trailing 12-month EPS. And analysts are expecting the same out of Alibaba, as there are 31 analysts covering the stock on Yahoo Finance, and they have an average EPS estimate of $9.16, a low of $7.69, and a high of $10.11. And if we go out to 2025, we could see that those numbers grow to $9.97 for the average, the low of $7.29, and a high EPS estimate of $11.17. And based on the 2025 numbers, we are getting the following forward P ratios. For the average estimate, we are getting 8.7, for the low 11.9, and for the high EPS estimate, we are getting 7.76. In terms of top line numbers, Alibaba has stayed relatively stable over the last year or so. They did experience a large pull forward of growth like a lot of other companies during 2020 and 2021, where they went from $83 billion of revenue all the way up to $134 billion of revenue. However, since then, they have seen a slight decline in their numbers, down around 8% year over year in the first quarter of this year. And I would expect over the next couple of quarters, Alibaba will get back to growth in terms of their top line numbers. This has to do with a couple of factors. The first being the deregulation that we just talked about. This allows businesses to really open up and take on a little bit more risk because they aren't as worried about scrutiny from the government. The second has to do with the place of the economy in China. China right now has been on uneven ground, and the Chinese government understands that. That's part of the reason why this deregulation is coming into play. But the other thing that the Chinese government is doing is they have been looking at their interest rates and dropping them over the last few months. And what that does is that allows money to be more readily available for these larger businesses to reinvest back into the business. So keep in mind, I do own shares of Alibaba, and that has to do with a couple of reasons. The first being EPS growth. We are seeing them get back to large amounts of growth, and I think they're going to get back to the numbers that we saw a couple years ago of around $8 to $10 of EPS. And I think they'll even start smashing those numbers out, as I think $11 to $12 could easily be a possibility over the next couple of years. The second thing is valuation. As they continue to smash these EPS numbers, that means their valuation will continue to drop lower and lower. So unless investors come in and buy up shares and drive the price up, we'll see valuations continue to fall low. And I already believe that Alibaba is trading at a very, very deep discount. I think it could easily trade at a 15 to 20 forward P ratio, and that would be a double to triple up from its current valuation. So in my opinion, right now, the only thing holding Alibaba back is the sentiment from investors around China. I think when investors get a little bit more confident in what the Chinese government is doing to grow their economy, that's when we'll start seeing money come back into these Chinese companies, and that will help bring up their valuations. And I think they could easily trade anywhere from 15 to a 25 forward P ratio, and that would be reasonable for a company like Alibaba. However, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.